All right. Back in the action here once again. Boy, does it feel good to be back here with you guys and gals on a Monday evening. It's about that time of day again. Time to get back to work here. Get ready for tomorrow's trading session. It's Monday evening. It's a brand new week, a brand new month. June 3rd, 2019. My name is Joseph, by the way. And this, of course, is your nightly newsletter. Now, don't forget, guys, I help traders find high-quality, predictable, reliable, usually profitable trading opportunities using a simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight is a little bit different. My job tonight is to identify the best levels, the best areas, the best setups, and really the best situations we're hunting for tomorrow. That's Tuesday's trading session. And tonight we're going to cover some oil. We'll grab some S&P, the Nasdaq, gold, and of course we'll wrap up tonight on that mighty Parabolic Euro futures contract. I'm going to jump in here first to oil right now. Oil, like a lot of markets, got beat up today, pushed back down to retest those lows. But there's one little wild card on that chart tonight. Listening to that oil chart, because I think that trading range is going to be the big kind of variable, the big wild card for tomorrow. It's pretty easy to see right now on oil. We start off as a big bull market going higher, and then obviously a 1, 2, 3 reversal. The market turned back to being a bear market. Most important thing right now is the bear market. I want to sell at a level of resistance. I've got a couple levels of resistance. I got some channels here to use. I got some swings here to use. And bottom line is I want to be a seller, right, up around the high of that channel. And tonight we'll talk about 2, maybe 3 different patterns we can use here to sell off of that high. Now, I mentioned the big variable, kind of the wild card for tomorrow, is that little tiny trading range that we started off today's session with. Now, you know me, anytime we see a range on the chart, we always know that range is important, even if it's really small like this one. And you can see, kind of funny how the day started off as a range and how it ended back in the range, I should say, here today. So what that tells me is I think we're going to have possibly some buying opportunities off of this low, but I know what you're thinking, right? Who wants to buy this market right now? I've got a very specific kind of counter trend reversal pattern I'm looking for to buy off of that low. I'm also watching some key levels up here around 55. So we'll talk about what a reversal might look like. And of course, we'll cover all the details tonight in this video. So if you're an oil trader, make sure you stick around for that here tonight in tonight's newsletter. Over on the S&P, boy, S&P felt like it never finished partying this weekend, right? Had a little bit too much fun over the weekend. It looks like they continued it right here and today. Almost punch drunk, it felt like today, right? Down, up, down, up, down, up. It was very little direction, which makes this a range-bound market. This looks like a very balanced market. There definitely is a bit of a bear bias to it, obviously, right, coming out of the end of last week. So a little bit of a bear bias to it, but really the most important factor right now on the S&P is that big trading range. I'm going to take that trading range. I'm going to find levels of resistance overhead, levels of support below, and then I want to be a buyer off the low. I want to be a seller off the high. I want to buy low. I want to sell high. I want to avoid the middle. But I'll tell you, we got 2 things here that you really got to kind of be aware of. One is this gap. Right? If you recall, the last time we saw a weekend gap, remember what happened last week? We'll talk about that here tonight. But the big thing is this most recent strong move. What do we always look for whenever we have a strong move in one direction? You probably already know the answer to that. If you don't know the answer to that, make sure you stick around for tonight's analysis on the S&P, which will talk about how we're going to use that strong move, but still sell back into that range, or what would it look like for a big short covering rally? Because as you can see, I've got some levels up here I'm watching, and we'll dig into more of those details here tonight as we get into the meat and potatoes of this video tonight. Over on the Nasdaq, did I say beat up? Yeah, this one got beat up and then kicked around a couple times today. Definitely a bear market. They never came back to fill that gap, right? We'll come back and talk about that here tonight. But 1, 2, 3 legs down. Typically, when a market goes 3 legs down, we know pretty much what to expect the following day. And most importantly, though, we know we're bearish. We know we want to sell at resistance. But there's that wild card again. There's that little tiny range, just like we talked about on oil. Market ends inside that range. It's a big, big clue here tonight for us if you're a Nasdaq trader. I want to be a seller, but I definitely don't want to sell here. And so we'll talk about some areas where I'm thinking about being a bear. The patterns will look to sell as it goes higher. And I'd be lying to you if I said I wasn't also looking for a chance to be a buyer off of those lows with the right pattern, obviously, right? With the right setup. And then maybe we get a nice reversal back up to fill that gap. We'll talk about how to trade that reversal, how to trade that break higher to make sure you're not chasing after the market and trading it like all the other rookies out there tomorrow morning. I'm going to jump into the NQ in a lot more detail here tonight. Got a lot to cover here tonight on this video. Gold is probably the easiest one of the chart on the chart tonight. Big run over the past few days on gold. And if you watch this newsletter, every evening, you probably know what I'm expecting here, right, for tomorrow. Big move ever since the end, right, of the month of May. And usually when a market goes this far, this quickly, usually it tells us exactly, right, what to look for the following day. So I know what I'm looking for here tomorrow, but the bottom line is we're bullish. We know we want to buy at support. I've got 2 buy zones here. I'm going to talk about why I like both of them and how to trade both of them. We'll also talk about what if the market goes pulling back here for us, what if it keeps going higher, and we'll cover all the details here tonight on the best way to trade that yellow metal on Tuesday morning. Over on the euro, the parabolic euro here today, right? Of course, market here running higher. One very distinct personality trait of this euro is how it just keeps on going higher, right? Keeps on going stronger. We call those parabolic moves. Parabolic moves are all about momentum. We know we're bullish. I know I want to be a buyer on this market. I've got some levels I'm watching here on the chart, and we'll talk about, right, how to buy these pullbacks. One thing I'm really concerned about here, and we'll talk more about this tonight as we dig into this video, is with these parabolic moves, we oftentimes get one particular type of pullback. And I'm going to dig into that here tonight and talk about how to trade that pullback and any other time you see a parabolic move right on that chart as well. All right, euro is ready to go. Gold is ready. Nasdaq, S&P, crude oil, you're here with me. I'm locked and loaded. But before we jump into the charts here and put the plan together for tomorrow, that's Tuesday's trading session, I want to remind you to join our mailing list so you never miss another great video. You know, every evening, right before I publish this video on our YouTube channel and upload it on our blog, I always send out an email to our best clients on our mailing list. That way, you get the email before everybody on YouTube gets it, and you're ready to go right before the rest of the group. Very, very easy to get on the email list. All I need is your name, your email address, and of course, hit that subscribe now button, right? Hit that subscribe button, and don't forget, guys, when you join the mailing list, I'll send you an email every evening right before that nightly newsletter goes live. That way you never miss a beat here Monday through Thursday evening on this newsletter. But when you join the mailing list, you have to check your inbox because I'm going to send you a verification email and a welcome email with a bunch of useful tools for you. So when you join the mailing list, check your inbox. If you don't see it there, sometimes our emails go to your spam folder. Check your spam, check your junk, check your promotions folder, and find that email. That way you get all the good stuff from us every evening on this newsletter. And then speaking of good stuff, Boy, I love it when you guys give me such great feedback. You know, I'm always listening. I'm always begging for feedback. I want to make this the best newsletter on YouTube. I want to make this the best place to learn and earn every evening on our blog. And I need your help. What do you love? What do you hate? What do you want to see more of? What would you like to see less of, right? If you could run the show back here, what would this newsletter be for you? Also, what's your favorite part of the newsletter? Do you like the news recap? Do you like the overview of each market? What's your favorite way to use it? Do you watch it at night? Do you watch it in the morning before you trade? I'd love to know how you're using it, what you see value in, and what you would change, right? I promise you won't hurt my feelings. I'm always trying to make this better. So to give me some feedback, drop me a comment in the comment section right below this video. It'll take you 2 seconds and it'll mean the world to me. Tell me your favorite market, how you're using it, what you would change, right? And while you're down there, don't forget, if you watch this video every evening, I would love it if you gave us a thumbs up on the video, because that goes really far at helping expose us, right, to more traders here on YouTube. It would mean the world to me if you took a couple moments out of your busy day, give me some feedback, give me a thumbs up on the video, and hit that subscribe button on the YouTube channel. That way you never miss any great lesson right here on a YouTube channel at School of Trade. And don't forget, I'm always here. If you have any questions, please don't forget, you can always pick up that phone and call me anytime you have any questions. I know, I'm old school. I actually answer the phone when you call the office. No call centers, no automated phone systems, right? It's just me and our small team here in Los Angeles. We look forward to working with you, answering your questions, because there's so much bad information out there on the internets these days, right? It's nice to be able to call us, get all the information you need about brokers, data, charting software, whatever questions you may have. Free pass to our trade room, free trial for the course, whatever questions you may have. Call that toll-free phone number, right? Use that live support tool in the upper right-hand corner. We really look forward to speaking with you here at our corporate headquarters in Los Angeles. But for now, though, we got some work to do, right? We got some work to do here tonight. Let's get those sleeves rolled up. It feels great to be back here with you all. Hope you guys had a great, restful weekend. I managed to pick up a bit of a head cold this weekend, so if I sound a little bit not like myself, if my bad jokes are even worse today, I can blame it on the head cold here tonight. But hopefully I'll push through that here, right? Not too badly here this week. So thank you so much for tuning in here tonight. But let's get ready for tomorrow's session. Tomorrow's Tuesday. It's June the 4th. Now, this is the first week of the month. First week of a new month. And we talked about this a little bit last week, right? But the end of the month into a new month, it's always going to be a little bit more volatile than the middle of the month, right? The beginning and the end of the month is always going to be a little bit more volatile because traders are always manipulating their positions at the end of the month to kind of pad their accounts, right? Because their numbers rely on it. And then most of the time, they've got to reinitiate those trades as they get back in for the beginning of the next month. So we oftentimes do see a lot of volatility as we go into that first week of the month. Now, with that said, we have a lot on the schedule here today, and it's really not a lot you can see on your average economic news calendar. So what I did was I created a bit of a cheat sheet here for us. And let's go over this relatively quickly here, right? So you know what we are looking for here this week. So news this week. Tomorrow, Tuesday, we have a 2-day Fed research conference. This, of course, is for the U.S., right? Tomorrow morning at 9:45, 9:50, you're going to hear from our Fed chairperson, right, Jerome Powell. He'll be leading, right, the opening remarks for that Fed research conference. I don't think anybody really knows how much the markets are going to be tuning into this tomorrow and on Wednesday, but anytime you put a bunch of Fed speakers together and you stick a video camera in front of them, you're going to have people listening and people are going to be trading off that information. So as much as I want to say this is big news tomorrow, I think everybody right now, we really haven't seen this before. It's kind of something new they're doing. It's called the Fed Research Conference, and it's 2 days. Pretty much all the Fed speakers are going to be doing a round table and participating. So again, we will see how it goes tomorrow, but we've got that happening the next 2 days here. What I would assume would happen is whatever comes out of the mouths of these Fed speakers, right? All the Fed leaders from all the central banks around the United States, they'll have their time in front of the camera, right? And I would imagine you're going to see traders taking positions based on what they say. So not a lot of scheduled news tomorrow, but again, that Fed research conference, right, on Tuesday is definitely going to be on our radar. Now, as we go later on in the week, we got it back again on Wednesday. We got that inventory report and that beige book before we go into Thursday. Thursday, we have what really was difficult to find. It wasn't on the main website. This one kind of snuck up on me here this week. The ECB meeting and announcement on Thursday. And Thursday is the 30th anniversary of that Tiananmen Square kind of controversy or situation happened, right, obviously 30 years ago. And while President Trump in the U.S. is in Europe, the VP Mike Pence is doing a speech on Thursday. That is probably going to have a lot of, jabs at China, I would imagine, with this trade war coming out here. So that's definitely on everyone's mind. And of course, on Friday, we got that non-farm payroll number on Friday morning. So that's a glimpse at the most important kind of stuff on the calendar here this week, because honestly, if you just look at the calendar, right, just kind of look at it by looking at it, you're not going to see very much that looks important this week. We got Jerome Powell tomorrow. That's the Fed conference, right, happening 2-day conference. Wednesday, we got that petroleum status report, the weekly inventory report. Thursday, honestly, probably not going to be that much going on there in the U.S., but we got that ECB announcement on Thursday, and then the big news of the month comes on Friday. Now, obviously, tomorrow, we're just worried about that 10 o'clock shock, right, around that Jerome Powell speech. We'll deal with the rest of this week. But now you know what the schedule looks like for the remainder of this first week. And again, that first week should be a little bit more volatile as traders get back to their desks and reinitiate positions they either added to or closed out, right, at the end of last month. So 10 o'clock tomorrow, 10 o'clock Eastern time is when I would expect to see the big fireworks, right, on our radar here for tomorrow morning. And then again, we'll kind of keep in touch tomorrow night to the rest of this week, and we'll keep you guys posted on any new developments, right, in this news, right, as it comes out. Now, let's dive into our charts here tonight. We've got our news all under control. We know what to expect there for tomorrow. I've got crude, S&P, Nasdaq, gold, and euro on the video here this evening. Let's jump into the black gold, the Texas tea, the crude oil futures. Let's jump into that first. Oil is obviously a bear market. There's no doubt about that, both short term and long term, right? So we know we are one hell of a bear market right now. Anytime I have a bear market, I'm always looking for levels of resistance to be a seller. I've lined up these lows, brought it up to these highs, and I've got this level of resistance that I'd like to use overhead at the top of that channel. Now, with that, we also can see here too, we've got 1, 2, 3 legs down. So we should see some support down here, and we should see some profit taking and a move back higher. That is a big piece of this puzzle. But as I mentioned in the introduction, the real big variable for tomorrow, the stuff we don't know, right, how the market will react, is that trading range. What does a range tell me? A range tells me to buy low. It tells me to sell high. With that bear bias, right, with this bearishness coming down, I know that I can sell very easily as long as I'm not trading inside that trading range. Being a buyer, though, down here, that's going to require a little bit more patience and more specific of an entry pattern, because it's not a bull market, right? So we have to make sure we're careful before we try being a buyer. Most important thing right now is, let's see if we can get a pullback, right? If I can get a pullback up off this low, what I've done is I've lined up the top of that channel along with these prior swings to create the battle zone. The battle zone for me is an area where it's just high enough to make the buyers think the market is turning bullish. This is why I call it the battle zone, because at this point, the buyers are going to think this market is bullish and they're going to try to buy the pullback. And I hope they do, because just like we saw back here, right, when they try to buy that pullback, now I know exactly where their stops are and I can sell right into those stops. Just like we saw back here, right? We ran lower, we pulled back, nice deep pullback. The buyers tried to buy the pullback, and what happened? Sellers were waiting right there to sell right into those stop losses. Remember, the fastest money you'll ever make is when you're going with the trend and getting in, and the people going against the trend are being forced to get out, right? So the poor buyers here who tried to buy that pullback, they didn't stand a chance. So what I'm looking for here is I'd like to see us go up, get into that battle zone area, right? Go up, get into that battle zone area, let the moving average come over, let these buyers try to buy the pullback off that moving average. Once they do, once we get back above that moving average, wait for those buyers to buy that pullback, then we know where their stops are and we can sell into those stops. You can also look for that pullback shortly thereafter. This is a great combination setup that we use in our trade room, which is a 2-try failure, right, into that pullback. It's a failure pattern, right, into a pullback pattern. A beautiful setup, right? All we need right now is to get that pullback. Now, what if we don't get the pullback? What if the market sits right here, right? What if we just sit right here and we end up going sideways inside of that range? Then what do we do? Well, now what I can do is I want to use the 2-try failure pattern. Let them go up once, let them try twice, and we can sell right into those stop losses. So again, imagine now, instead of a pullback and a buyer failure and sell back down, imagine now we sit here going quietly sideways here, again, inside that range around 53. What I'll do is I'll assume now we're bearish, we're balanced. I'm looking to sell above the high of the range, and to do that, I'll wait for a breakout. I'll wait for the buyers to try to buy the pullback. That tells me exactly where their stops are, and we can sell right into those stop losses for that move going back down. We call that a 2-try failure pattern. Now, what if the market goes lower, right? What if it goes lower here? Well, there's a couple different scenarios that you want to think about, right? Does the market go sideways and then go lower? Or does it just keep on going lower? You know, believe it or not, that is going to be a big part of this, because if it goes sideways first, then that confirms this balance. So let's say, for example, we go sideways first, then we make the run lower. Okay, how can I buy this thing back up? I can, but I have to respect the momentum of those bears. Here's what I mean. How many times would I try to sell this before I give up on it? I'd probably give it 1 try. I'd probably give it 2 tries before I give up, right? And the market will run higher. We call this a nested failure pattern. So imagine for a moment, guys, we go sideways in the short term, we break lower, let those bears try to sell it once, let them try to sell it twice, and then up from there, right? Up from there. 1 try for the bears, 2 try for the bears. And again, range-bound market says buy low, sell high. It's just because it's a bear market, I've got to wait for the 1 and the 2. We call these nested failure patterns. Now, what if we don't go sideways? What if we just roll over and keep going lower? Then what do I do? Well, now momentum is much more bearish, which means I need a reversal pattern. My favorite reversal pattern is called a crown reversal, and it looks like this. It'll be a higher low followed by a strong pop higher. Now, mark up that higher low. That's your sweet spot, and we look for a trap below that low, little tiny trap setup right below that low. And again, we call this a crown reversal. You'll notice it's very similar to that last buy setup, but I specified in this one, you've got to see that trap, right? It's got to be a trap off that low. And again, we call those crown reversal patterns. So boy, we've covered a lot here so far, but what about a reversal? What if the market reverses? How can we trade it? Where would it be going? It's probably going to go back to that range where we spent a good portion on Friday, right? There's a range up there around 55. Now, 55 is a really popular big round number among crude oil traders just because it's so easy to remember, right? Easy to see on the chart as well. So we know where the market wants to go if it goes higher, right? It'll want to go back to retest this high, but eventually it'll want to get back up to that 55 area, as I mentioned earlier. How do we trade a reversal? How do we know it's safe to trade a reversal? Because look what happened the last time. The last couple times these buyers tried to take it higher, they completely fell flat on their face, right? And it slammed back lower again. So we already know if we see a strong move up, I can't just buy this pullback, right? I can't just buy that pullback because that pullback's likely going to fail, right? As history often repeats itself here, and here, right? So yeah, sometimes they work, but they're not very reliable. What's a better way to trade it? A better way to trade it is to look for what I call a 1, 2, 3 reversal. 1 is the strong move up. 2 is the pullback to the moving average, and 3 is a strong move off the moving average. That strong move off the moving average is the most important factor, right, in a reversal. I know it's not fun to wait for it. I know nobody wants to watch this go without them, but the only other option is to buy it too early. And you can see it's not a reliable strategy in a bear market. You're more than welcome to try calling reversals, but I think you're wasting your time and your money. What I would do is wait for that 1, 2, 3, then mark up that high, mark up this high, and then down to that low down there, draw that low in, and that creates the sweet spot. The sweet spot is right where that prior high and the low of that hidden channel come together. That's where I want to be a buyer for that 1, 2, 3 reversal. And again, targets now are going to be up around that $55 a barrel. So there you got it, right? Our buy setups, our sell setups. And guys, I have so much more that I want to share with you. Trap patterns, failure patterns, nested patterns, reversal patterns. And to do that, how about access to a free trading course? I'll put a link in the upper right-hand corner. I'll also put a big red button right below the video tonight, right here on the blog at Sideways Markets. If you're serious about your trading career and you want a deeper dive into all my favorite entry patterns, along with hundreds of examples we find every morning in our trade room, grab that free course in the upper right hand corner or below that video. Not to worry, I'll be here when you come back. Get registered, and then don't forget, when you join the free course, make sure you check your inbox. I'm going to send you a welcome email, and you've got to verify that you got it, right? So check your inbox, check your spam folder, check your junk folder for that email verification to get access to the members section of our website. All right, let's keep going. Now that you guys know where to get more information, how about some S&P? S&P is a relatively easy one here today. It's a range-bound market. Anytime I have a range-bound market, I always know the plan is pretty simple, right? I want to buy low, I want to sell high, and most importantly, avoid the middle of that trading range. It's not always very easy to avoid the middle. That's usually one of the hardest parts of a range-bound market. Now, how do we trade a range-bound market, right? How do I buy low? How do I sell high? Well, bottom line is I want to use a failure pattern to buy low, a failure pattern to sell high, but there's one big variable on this chart, and that is this strength move. Okay, now I want you to look left over here, and you can see an example of what happened the last time we saw a big strength move coming off of that low. Look what happened. They went up. How many times did the buyers buy it? They tried once, they tried twice, and then it collapsed under its own weight. That's exactly what type of pattern. If you missed it on the first lesson, it's called a nested, right? N-E-S-T-E-D, a nested entry pattern. So as the market runs higher, again, that's why I said in the introduction, the strength of this move is the big variable, because anytime we see a strong move in one direction, we have to expect there's going to be a second leg. And so we have to respect that momentum, give those buyers a chance to buy the first pullback. Those will usually be the rookie buyers buying the shallow pullback. The more experienced buyers are waiting just below that low. They'll try a second time. This is the 1, this is the 2, and then from there, we are selling back down into that trading range, right? That's the key. We want to buy low, we want to sell high, and again, as I mentioned earlier, there is an overall bearishness to this market, so we do want to be focused on selling off this high right now. The only problem is that strong bull move. So as it goes up, they may hold this pullback and get that 1, 2, 3 reversal. Their target, of course, up around the high of that range. We'll talk about that in a moment here. But selling off this high, strong move up, 1, 2, right, and back down into that trading range. Now, how do I buy off the low? Great example. Look at this pattern right here, right? The bears take it lower. The sellers try to sell off of that moving average. When they fail, right, the buyers are buying into that stop loss. We've seen a lot of these. 1, 2, right, and up we go. 1, 2, and up we go. The bottom line is if I get back down to that low, look for that 2-try failure pattern. Let them try to sell that pullback. And then we know exactly where their stops are, and we're trying to buy, right? We're buying into those stop losses. Now, remember, one of the key components here is making sure we don't trade in the middle, right? So as I look at this, you really want to see us, if I can zoom a little bit closer on this, right? You really want to get it down, have that moving average come over, get that failure underneath, right? Underneath the range. You really don't want to be buying too far up into that range, right? You want to get it as it goes back up, right, into that trading range. So you're buying low, you're selling high. Because momentum right now, it's a nested failure off the high as we collapse back down. If we get another strong momentum move down, right, if it collapses back down, right, kind of like this one back here, right, we make a run down, they try once, they try twice, and then back up, same basic idea, right? If they run lower, if it's really a strong move down, it's a 1, it's a 2, right, and back up into that trading range from there. Buying low, selling high, right, and avoiding the middle. Now, what's a breakout look like? Breakout, strong move, got that. Pull back to the moving average? Well, maybe. Third thing, strong move off the moving average. You'll notice they tried to hold it earlier. They got everything they needed. It was on a silver platter. Strong move up, pulling back. They just couldn't pull the trigger and make it work going higher. Will this time be different? I don't know, right? Will it be different? Strong move up, pull back to the moving average. Will this be a short covering rally as we run higher? I don't know. We'll have to wait and see. I'll mark up that high, mark up that high, down to that low, right? That creates our sweet spot. I'm looking to buy the low of that new hidden channel, right? Buying the low of that hidden channel. Now, where's our target on that? All right, so where's our target on this? Let's zoom out real quick, and you can see here for a moment that big range, right, coming in, not end of last week, but was it Tuesday, Wednesday, right? Wednesday, Thursday last week. That range up there at 2780, 2790 area, just before that big round number at 2800. That's definitely going to be on our radar here, right, for that bull run going higher. And obviously here, our job right now, though, is to buy low. It is to sell high, right? Avoid that middle. Use that failure pattern. And again, as I mentioned earlier, right, that strong move up, 1, 2, and then back down in. Or do they hold it? Only time will tell right now. Oh, and don't forget, if you want to see all kinds of examples, right, of these nested failures, these 2-try failures, grab that free course in the upper right-hand corner. In the meantime, though, let's keep this party rolling here now. Over to the Nasdaq. Nasdaq is quite obviously bearish. The news headlines today were not very friendly with the Nasdaq. 4 major companies on the Nasdaq being targeted here this week by a Department of Justice investigation into antitrust or monopoly violations here in the U.S. They do take that stuff quite seriously. There have been quite a number of big corporations that have been forced to break up here in the U.S. over the past 50 years. We'll see if it materializes into that, but that's that's what's causing this market right now to really get this big drop, right, as it goes lower. Most important thing right now is anytime I see a market go 1, 2, 3 big legs, I always start watching for a trading range, right? Range-bound markets are very, very common after we get such a big move down. So knowing that, I can easily see we have a bit of a range right there. So it's right around that big round number at 7,000. Big round number, 3 legs down, trading range. If I had to guess tomorrow, I would guess we're going to probably see a little bit of balance start to settle in here around that big round number. Now, we know we're bearish. We know we have this range, right? That's probably going to be the most important clue here for tomorrow. I want to buy low, I want to sell high, and avoid the middle, right, of that trading range, right? Buy low, sell high, and avoid the middle. I want to stay away from this area, stay out of that area. And then watch what I'm doing. I'm using the amount of the move below the range combined with the amount of the move above the range to find a couple key levels of resistance up here, which of course I've labeled the battle zone. So we know right now that the buyers definitely have potential to swing all the way higher, right? Get that pendulum swing, that momentum to swing. And if we do get this market to keep swinging higher here, which of these patterns do you think would be the best pattern to look for? We just talked about it, right? If we see a strong move going higher, what's the best type of failure pattern? The most reliable, dependable failure. It's that nested failure, right? Let them try once, let them try twice, and then we'll sell it right back down in. In fact, I mean, this is the same basic pattern because we are so bearish that if we do make another leg lower here, I'll look for that 1, 2, and then back up into that trading range. Remember, anytime I see a range on the chart, it's usually going to take front and center, right? It'll usually be front and center on that chart. So, moral of the story is if we do get that pendulum swing, right, the amount of the move below the range is the amount of the move above the range. If we do see that pendulum swing all the way through, that will likely be a very strong move. Anytime we see a strong move, we know we're probably going to see a second leg. If we do get that second leg, we know where they're trying to go. They're trying to go back to fill that gap right over the weekend at 71.37 half. If they don't get that strong move, though, we're looking for a 1, looking for 2, and then selling back down into that trading range. Now, what if we don't get that rally higher? What if it just sits here for a while tomorrow morning? Then what? Well, now we're basically a range-bound market with a bullishness in the short term and a bearishness in the long term, which means we're pretty much left to buy low, sell high, and focus on failures. I want to see us go up, let those buyers sort of buy the pullback, and I'm selling into those stops. Let them go down. Again, because of the bearishness, I want to see the 1, the 2, and the back up. Does that make sense, right? The momentum of the market is what determines which type of pattern will work best for this type of range. And again, what would a range breakout look like? It'd be a 1, a 2, and then what? A strong move higher, right? That strong move higher. If we can get that strong move higher, mark up that high, mark up that high, down to that low, right? That creates your sweet spot, and we're buying, right? And we're buying off of that low. That's a great setup, but you have to wait for it. The hardest part about that pattern is not being suckered into that first pullback, right? Because the first pullback's not going to be the most reliable. The more reliable, the more dependable, the higher quality, higher probability setup will be the opposite side, right, of that, or the second move, right, as it comes up off of that low. So just keep it in mind, right? Keep it in mind as you're watching for that break higher. So now we know how to sell it. We know how to buy it. We know what to look for if it goes ranging out on us. And, of course, what a reversal looks like. Let's keep going. About some gold right now. Boy, gold is on one hell of a move here right now. It's obviously bullish. We've got 2 big legs up in today's trading session. But, I mean, come on. This doesn't even it doesn't even give you, it doesn't even do justice to it. I mean, look at how big this darn move has been pretty much ever since. If you recall from last week, we had that range, right? We found that low. We talked about that 1-2 failure. I mean, we pretty much grabbed that low, and this thing just never looked back. If you follow the newsletter every evening, you probably remember that from the end of the month, right? Or the week last week. So we are just running right now. Now, as I mentioned before, anytime I see a market go this far, right, without any real pullback, you know that anytime we see a pullback, buyers are waiting. Buyers are drooling over a pullback right now. There's been no deep pullbacks. But look what happened. Look at the last time the market pulled back. Is that not a classic failure, right? We see it pull back. It's obviously a bull market, right? Who on earth is trying to sell that pullback right there? Well, somebody did, right? Some poor sucker did, right? And guess what? Buyers were waiting right there to buy right into those stop losses, right? That's exactly the same pattern that I'd like to find somewhere on this pullback. Now, you'll notice here, I've got a couple battle zones on this. I know we're bullish right now, obviously. I want to find levels of support. I've marked up that high to find that low. That kind of creates that hidden channel, right? That hidden channel is one big clue. Another big clue, of course, is this area right there, a reversal line. Reversal lines are really powerful. Remember, though, when it comes to a reversal line, reversal lines oftentimes will come back and hit it once, but they'll almost always come back a second time. The little shallow pullback, right? That first little shallow pullback doesn't usually count, at least not in my book. It doesn't really count as a test of that reversal line. It's this one back here that I really, really want. So here's some food for thought on this, right? Some food for thought. I've got two battle zones. One, right? The big thing right now is a very strong move higher. Anytime we see a strong move higher, the odds are very good that we get any shallow pullback and a retest of that high. Now, the shallow pullback is kind of the only option we may get, right? Because it's been such a big bull market. And I can't assume we're going to get a deep pullback here. For all I know, the fundamental reasons why this market is doing this will continue into the overnight session. But I also want to be ready for if we do get that deeper pullback, because that deeper pullback is obviously the most desirable, because that's going to give us a chance to risk small, right, to earn nice and large. So how do we plan for both of these? Well, the first one and the second one, again, I want to buy on a pullback right now. If I can get the pullback down into that shallow battle zone, what I want here is to see those bears try to sell off of it so I can then buy into their stops. Now, this is going to be a relatively aggressive trade, right? And again, you can see it's almost identical, right? Look left, and that's exactly the same setup we're looking for again. Okay, where's my target on that? The target's going to be a retest of that high. I will leave a runner, but you want to make sure you take the lion's share of that profit off at that retest of the high. It's not guaranteed to go through that high. I know it feels like it is, but it's not guaranteed. It may end up bouncing off that high and becoming a range, which we'll talk about in a moment as well. Now, what if we really pull back, right? What if we really pull back? Well, if we really get a really sharp pullback on this, it'll probably be one of two scenarios. One would be a two-legged pullback, draw a trend line over, use that trend line as the key level of support, right? We call those two-legged pullbacks. And again, you'll learn all about those patterns inside of our free course I mentioned earlier, right? It's linked up in the upper right-hand corner up there, right? So two-legged pullback, or as we call it, the 2LP, right? The 2LP, two-legged pullback. And that name comes from just simply having two legs of the pullback, one leg, right? And then two legs on that pullback. So two-legged pullback, and you're buying off that low. Or if it really runs lower here, right? Just watch for that same nested failure, right? Let them try once, let them try twice. And again, you want to see it come back to the moving average, right? Let the bears try once, let them try twice. Again, you want to make sure it's very clear there are two potential tries. Okay, it's usually pretty obvious. We, of course, will do this together tomorrow morning in our trade room. And once we've got those 2 tries, then we know where stops are, right? And we're buying right into those stops. So as you can see, I can be relatively aggressive on a shallow pullback here. Target back to retest the high. Or if it really tumbles on a 2-legged pullback, right, I can use that trend line up and over and buy from there. Or if it just slices lower, then it's the nested, right? It's the 1, it's the 2, and we're back up from there, back up to retest the high. Now, I also, like I mentioned, you've got to be thinking possible range here, right? There is possibility here this might be a range, and we may end up just chopping around, right, inside that range. If it does end up going sideways, the moving average flattens out, double tops, double bottoms, or triangle forms up here, it's still obviously bullish. We want to be a buyer, but now we want to use that failure pattern, right? Let them go lower, get that moving average coming over, wait for those sellers to sell off the moving average. That's all we need to now know where their stops are, and we're buying right into those stops. Now, what if the market keeps going, right? What if it doesn't stop? What if it keeps going higher? If it keeps going higher, I'm still waiting for that same basic setup, that pullback, that failure, and that buy back up. So if it keeps going higher, right? If it keeps going higher, well, then we know where the next target is. The next target will be another measured move. I don't expect this, but hey, always when we're ready for anything, right? That 1340 area is that next big target. If they keep on running higher here, and we keep on running higher, I will, of course, adjust this channel higher, adjust that channel higher, and we'll look, again, same basic pattern, that failure, right, into that pullback, and that run back up from there, right? Failure patterns into pullback patterns as we reach that next measured move going higher. And obviously, right, could it reverse? It could reverse. It seems completely unrealistic right now. This market turns bearish on us. Again, it may give us a sharp pullback, and we may have to be patient for the 1, the 2, and then back up. But a full-blown reversal, probably not going to happen. But what would it look like? 1, 2, 3, strong move down, pull back, strong move off. Once we see that strong move off the moving average, it's a bear market. Mark that low, up at that high, right? The major high, that creates my sweet spot, and we're selling off that high. Great setup. Again, just got to wait for it, right? Just got to wait for that setup. Gold looks great here for tomorrow. Hopefully we get that deep pullback we've been waiting for, but I'm saving the best for last here, a parabolic move here on the euro. What is our direction? We're obviously bullish right now, right? No doubt about that. But we called that great reversal at the end of last week, didn't we, on this newsletter? Hope you guys made a killing on that end of last week. The bottom line is we know we're bullish right now. I want to buy at support. I'm marking up these highs. Lines up beautifully at that low. Great area of support to be a buyer on. I'm also watching here that prior high. That was a prior resistance level that can be used as support. That's a great level of support. And then speaking of resistance that can be used as support, so is that area right there, right? This level right there. That's also what I call a reversal line. Now, I'm also watching the big leg up, right? Kind of leg 1. Then you've got this big leg 2. Really, in my eyes, though, all that is one overextended second leg. So when we pull back now, let's say we pull back here now, my measured move, and again, this is all really kind of waiting to see how far we get the pullback right now. If we do get a really deep pullback, or really as whatever pullback we get, I'm going to calculate it up right from there and use that same distance, right? Use that leg as that leg, and that gives me now that measured move. Okay, so those are the basic principles. But the most important clue here is the steepness of this market. This is called a parabolic move. Parabolic moves are pretty interesting because what happens is market starts off going bullish, right, bullish, and then it just takes off, right? It's called a parabolic move because the slope of the market gets steeper by the second, right? It gets basically overbought. It gets unrealistically steep. And I said earlier, it's all about momentum, right? When a market does this, right, it's all about momentum. That momentum swings so far that what happens is a lot of professionals who are in those positions, they get out. And they're going, this is a gift, right? Get out, sell your way out of this long position. And here's what happens. A lot of times that parabolic market will collapse right back down again. Now, I don't expect it to collapse just that easily, but we may see a just as sharp pullback as it goes lower. So that's kind of the thing I'm watching for right now. Because the momentum, right? Because that momentum was so strong going higher. I mean, you've got sellers. I mean, look at it, right? You've got buyers here right now that were expecting a measured move. They were expecting a retest of that high, and it just blasted. So I would imagine that anybody who had a position open on that, they said, that's a gift, take my profit. And oftentimes that extreme profit taking will result in just as steep, right, of a pullback. So there are really a couple scenarios that you're kind of watching for right now. One is anytime I see a strong move like this and it goes this far, we oftentimes see a trading range. So if we do get this and it starts going sideways on us, probably not going to happen, but definitely may. If it goes sideways on us, here's the trick. Take the size of that range, right? The size of that range. Copy and paste it down, and that will create a support level. I don't have enough information yet to give you exactly where that range is, but once we see that range, we'll copy and paste it down. That will give me a key level of support, and I can use that support now for what? For that one try, two try, right? Let them try once, let them try twice, that two try failure pattern. Where's my target? Well, I'm buying at the stops. Right? I'm buying into those sellers' stop losses. Where's my target? Back up to retest that high. If you got an extra runner, right, leave it for the measured move overhead. That's one scenario watching here on that Euro for tomorrow. Another scenario, which I think is more likely, is that we get that relatively shallow pullback. Anytime we see a strong move in one direction, we always know you're going to probably get a retest of that high, if not a full-blown symmetrical second leg. So if we get that strong pullback, we go below that moving average, right? The bears will probably try to sell off that moving average. That's exactly what I'm hoping for, and I can mark up that high. That's where stops are hanging out. I can buy into those stops, and then don't forget, don't chase after it. Buy the pullback from there, right? It's a failure pattern into a pullback from there. But what about that parabolic move? What if it really collapses down? Then what do we do, right? If this thing goes rocket ship up, and then rocket ship back down, pardon the French. I should have mentioned that ahead of the video. Get the kids out of the room. I apologize about that. Haven't done that on this newsletter before. But the bottom line is anytime we see a strong pull back, what do? We have to respect that move, right? That momentum. So I want to be a buyer, obviously, because we haven't turned bearish, right? It's not a 1, 2, 3 reversal yet. It's just a really deep pullback. So what do you do on a really deep pullback, right? You let the bears try once, try twice. You got it. See how that works? Momentum. The thing about a parabolic move is it may go sideways. It may only give us a little short pullback, but oftentimes the momentum of that market is so far overdone that it slams back in the opposite direction. I've got a key level of support down here. Just make sure, though, when you get that big drop down, if we do get it, let them try once, let them try twice. Then we're buying right into those stop losses, right? We're buying into those stops. And then, of course, buying that pullback from there. Two really great, reliable setups. We just got to wait to see which type of pullback, right, do we get right now. And again, if we do get the 1, 2, 3 reversal, which is by all means possible, right, mark that low, that high, there's my sweet spot, right, and we're selling, right, and we are selling off that high. Where's my target? big old target now, all the way back down to the 11.5 area at the low of this big move, right, from end of last month. So very, very big move there on the euro, a parabolic move. Will it go sideways? Will it pull back? Will it really pull back? We don't know yet. We're waiting to see what we get. If it keeps going higher here, right? If it keeps going higher here, we're pretty much waiting for the same thing. That deep pullback, right? That failure off the moving average, right? Buying the failure, buying the pullback, right? And up from there. Just another day in the office, right, for us tomorrow on that euro. So we are locked and loaded for tomorrow morning, right? And don't forget, guys, right? Don't forget, we're coming back tomorrow morning, like we do every morning, 8 o'clock Eastern time. We open up our trade room because, the strategy is pretty simple, right? We define our day type, we add our analysis, and we wait for the setups. What's not so simple are the financial markets. They're always a little bit different. Every day is kind of like a puzzle. And I'll tell you, sometimes the market moves very quickly. Sometimes it moves very slowly. Sometimes it does a curveball, and it really helped be with somebody who's got some experience. I've been running my trade room for over 11 years here at School of Trade. It's hard to believe that much time has flown right by. But every morning, we do it together right at 8 o'clock Eastern time, and I would love to have you there with me tomorrow morning as a brand new member. To join up and get started, check out the advanced course. It's right below this video tonight, or it's right below my ugly mug on the video right now, right on the homepage of our website. Grab the advanced course and learn more about what it takes to become a brand new client. If you're not ready yet to become a new client, I've got a great free trial. That free trial right to the left of me here, that free trial has a free pass to our trade room, access to our free course. Literally, at this point, thousands of examples of real setups we see every day in our trade room. You'll absolutely love it. Just remember, though, when you join that free trial, check your inbox, including your spam folder. Sometimes those verification emails will end up in your spam folder. But no matter what you do, though, come back and see us tomorrow morning as a client or tomorrow evening, and we'll do it all again like we do every evening on this nightly newsletter. It is always great to be here with you guys and gals. Now get out of here, right? We get some Stanley Cup hockey on television tonight here. I am extremely excited for Game 4. Who you got in the game tonight? Drop me some comments in the comment section below. No matter what, though, come back and see us again next time. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.